Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. Now it's time to take stock of what's happened so far in the year. We need to look at what's happened with house prices, inflation, interest rates, and more. And once we've done that, we'll also look forward to the rest of the year and help you navigate this wonderful world of property. So a super useful episode is coming up.
Welcome to the Property Podcast, where every Thursday morning we take time out from advising a multi-million pound property fund and putting together hundreds of deals for our clients and bring you some of what we've learned along the way for free. This week we're reflecting on the year so far and sharing our views of what's yet to come. I think you'll find it really valuable, and do make sure you stick around to the end because we're sharing a resource that could make your travel a whole lot easier. On to our news story this week, and this week's news is a lack of news. More specifically, a lack of news about the Renters Reform Bill, which appears to have ground to a bit of a halt. When the bill was introduced to the House of Commons earlier this year, after years of delay, originally it was meant to have its second reading, which is the next stage, the following day, and it looked like the government wanted to really ram it through quickly. But that ended up being postponed, and now with the summer break looming, it looks like that second reading isn't going to happen until the autumn. So given that there's a lengthy parliamentary process to go through after that, and that when that's happened, there's going to be a delay before it can be implemented, we could be looking at quite a while before the measures in this bill actually become law. And I suppose this delay is good news for investors because it allows more time for people like landlord organisations to make the case to government about why some of the more silly bits of the bill should be changed. So if anything changes, we will, of course, keep you updated. And if you missed this earlier in the year and you have no idea what this is all about, then we'll link in the show notes to a YouTube video where we tell you everything you need to know.
Before we get going, a huge thank you to everyone who joined us for our first masterclass. Yes, Property Hub Select members, you were treated to your first ever masterclass. I really, Mr. D, take a bow because you wrote the book pretty much on inflation, and it was a masterclass on that very subject, although we gave it a better title than that.
Yeah, it was so good. Made it really interactive, gave people a chance to get involved and give opinions and ask questions and things like that, which made it super fun. And it wasn't just about inflation, it's about how to actually really harness inflation and make that a core part of your investment strategy, which is something that we've touched on so many times in the podcast. But this was, for the first time, really laying out the huge benefits of considering how to harness inflation as a core part of your strategy, putting numbers around it. And there's some really surprising numbers that I managed to dig out for that as well. And all the implications that flow from that in terms of how you invest and the decisions you make. It's such a great format for being able to go deep on topics in that kind of way. It was really great to do the first one, and I'm super excited about doing plenty more like that for Property Hub Select members in the coming months.
Yeah, it was a really strong start, if I do say so myself. So I'm really excited about doing more and more of these, to just bring in this extra level of content to Property Hub Select members. And if you're interested in checking out more about Property Hub Select and what it's all about, go to propertyhub.net/select.
So we've made it to the halfway point of 2023. A little bit beyond, actually. And finally, it feels like it. After a ropey start weather-wise, I've finally been living in shorts for weeks. And with a big chunk of year behind us, but still plenty of time ahead, it seemed like the right time to have a little check-in. Take a breather, blow the whistle, come in for half-time, and assess how things have been going so far. Because it's been, for sure, an eventful year. So taking 15 minutes to pull ourselves out of the day-to-day drama, reassess and reset for the rest of the year ahead is bound to mean that we make better decisions and take more action for the rest of the year. The unfortunate side effect, Rob, is it does give us a chance to check in early on our predictions, which we made only 6 months ago, but already the world feels like a very different place from how it did back then.
It did. So how have we done? Well, let's start with what we all want to know and talk about is house prices. So according to Nationwide, house prices are down by 1.5% so far. And Rob, you said the market could go up or down by 2% this year. So if the year finished today, which unfortunately for you it doesn't, well, at least as far as your predictions are concerned, you would be right. But so far, so good. I said it'd be up by 2%, but it could be anywhere from flat 0 to 4%. So I'm currently wrong.
So far, it looks like you're further from the mark. And if you listen to any mainstream prediction about what's going to happen from here on in, I'm going to end up being wrong too, because the fall is going to be far greater than the 2% that was at the bottom of my range. But I'm interested to know, Rob, if you've given up hope on your prediction yet. Because back when we recorded this, I remember you saying that the first half, and indeed the first quarter of the year, would be the most difficult. And from there, things would improve. So we'd see the toughest market conditions in the first few months of the year, then things would start looking up. That seemed, up until a few weeks ago, like it was going to be the case. That did seem to be the way things were going. But then, of course, because of inflation data, mortgage rates spiked again, and it seemed like conditions suddenly became a whole lot worse. So where do you stand now? Do you still believe that the best part of the year in terms of sentiment and the market picking up is ahead, or have you been forced to revise that view because of what's happened over the last month?
It's a rare event, Rob, for me to say this, at least publicly, but I don't know. I would love another month just to think about it and assess it. But if I'm put on a spot, I'll give you my immediate thoughts and reaction. This is the tough thing about podcasting, right? Because people can go, well, on this date you said, but here it goes. I think we're in the mix of the worst part of the year right now. And I do think it will get better. By when and by how much, it's tough to say. The property prices may slide a little further. In fact, I'd be surprised if they didn't. But I would also be surprised if it didn't end up close to what you've now predicted. I wasn't far away from what you said, but I would not be surprised if the 1.5 that it is today is close to what it is at the end of the year. So I'd say the worst part of the year has happened a little bit later than I'd expected, with that surprising increase in interest rates that we had, up by 0.5%, which kind of shocked the market a bit. But that was its intention, to shock the market. So if that works, then we may see it fall a little further over the next few months, but then look to recover the latter part of this year. Now, you have to remember, I'm a little out on my prediction currently, only by 1.5. Rob, you're bang on. Other experts had said that the market this year, so Lloyd's and Halifax, for example, will fall by 8%. The OBR, the Office for Budget Responsibility, said it expected prices to fall by 10%, and Capital Economics, well, they were up at 12%. So, yes, you could rightly say that we got half a year left, and they could be right. But I think we'll be closer than they will. I'm extremely confident of that. And if they could revise their numbers right now, which they often do, I'm sure they'd ease off on those falls, on where they think we'll end up by the end of the year. So I think it's going to be an interesting few months, and then I do expect things to settle down. We'll see. Like you said, Rob, it's half-time, not full-time, and I've still got hope that if I'm not right, I'm not going to be miles away. Where we're not miles away, though, Rob, and we will give ourselves some credit here, it's started to become eerie, almost spooky ability for year in, year out to pick the best places to invest in the country. And it's not just once we've done this, it's like multiple years we've got the majority right on when we've said we feel these areas are the best to invest in. And you could, and rightly so, say that, well, we are closer to the market than most people. We are speaking to agents all over the country. We understand what projects are coming online, how that might impact the market, and therefore what the future may hold. But when we look at the cities, what we predicted would do well this year, and what currently has happened, albeit only halfway, I don't know if smug's the right word, Rob, but I'm pretty pleased.
I haven't actually looked. So share the smugness. How are we doing?
Well, we said that Nottingham, Birmingham and Manchester, we both agreed that they'd be the top performing cities. Currently, Nottingham is number 1, Birmingham is number 2, and Manchester is number 4. So you can't get much better than that. I think we should be pretty pleased with those predictions. You went on to say Cardiff would be another one that would do well, and I said Derby. Now, Derby isn't in the main index, so we can't check on how Derby is doing. Cardiff is currently 8th, so you weren't right, but it's still done quite well, and it's still in positive territory. And like we've said multiple times, we're only halfway through, but to get 3 out your 4, I think, is pretty good work. So I'm happy with that. And because we are so close to the market and we know what's happening, we know what we're seeing, I'm extremely confident by the end of the year that Nottingham, Birmingham and Manchester will be still right up there, because their markets in these turbulent times are proving to be far more resilient, and there's a lot of market activity there.
Yeah, which really helps. We talk about market averages a lot, and lots of the time it's convenient to talk about country averages. But of course, no one buys the average property. You buy a small number of properties in specific locations. So if you can get those locations right, that really helps you, regardless of what the market's doing.
Are you looking to expand your property portfolio or just get started? Well, let me introduce you to Property Hub Invest, the smart and easy way to invest in property. With our vast network and expertise, we provide unique opportunity to access a wide range of high quality, hand-picked properties. So whether you're a seasoned investor or just starting out, our team of experts will guide you every step of the way. Rob and I use Property Hub Invest as well. That's the biggest endorsement we can give it. It's a service that we've built that we love so much that it helps us build our portfolios. Why not let it help you too? Check out Property Hub Invest by going to propertyhub.net/invest.
We also talked about interest rates, which we have not got right so far. We both had interest rates peaking at 4.5%. That was not the case. At the time of recording, it's at 5%, and everyone believes it's going to go up further from there. So we've already got that one wrong. We also talked about rates coming down from there. So I said that the rate would end the year at below 4%. You said from 3.5% to 4.5% by the end of the year. That could still happen, but I'd say that's looking a little bit ropey as well. I think it's entirely possible that we'll get a good month or two of inflation figures, and so the peak will end up being lower than the 6.25% or something that the market's currently pricing in. So they could pause before getting to that point, but I don't see it coming down that quickly. I still very much believe that inflation and interest rates will be coming down a fair old way from where they are now, just not probably by the end of the year. And this is the hardest part of the whole thing, isn't it, Rob? It's the timing. Being right about the direction of things is relatively easy. Trying to land everything within a 12-month period is really hard.
It is, but we knew what we signed up for when we did this, so I don't think people will go too easy on us. We are currently wrong. Definitely wrong about the peak. That is confirmed. We'll see where we end up at the end of the year. I hope we're right. I don't think we will be, but I do feel, like you, Rob, that they will start to drop. By when, though, is going to be interesting. It'd be great if we got a drop before the end of the year. Just one, just for that change in direction. I think that would be a real moment, and I think it would give everyone a lot of confidence. We'll see. I certainly think we'll see drops before the next election, because although the Bank of England are independent, I think that would be well received if that did happen before an election. So I'd lay big money on that. But the next election is unlikely to be before the end of the year. So we'll see. We'll see when this timing plays out. And of course, Rob, the reason why interest rates are on the up and higher than we expected is because inflation has really pushed on. Now, we said by the end of the year a few different things. You said it'd be below 5%. I seem to remember, maybe I'm misremembering this, but I seem to remember you kind of scoffed when I said it'll be less than 2022. Like, of course it will be. But actually, where we are today, it doesn't seem such an outrageous prediction. It probably will be less than 2022, but currently it's not a lot less.
Well, yeah, I made fun of you at the time because it was such a ridiculously vague prediction. At the time, inflation was over 11%. So saying lower wasn't one of the braver calls you've made over the years. But as it turns out, it wasn't as nailed on as it seemed either, because you've only fallen into the 8s. I do, however, feel that your brave call of less than 11% will turn out to be correct. And I even think there's a fair chance that my below 5% will turn out to be the case.
Don't worry, Rob. Rishi promised you. He didn't make a prediction, he made a promise.
Yeah, well, that's it. He went one step further than I did. He said he's actually going to cause this to happen. Don't know how. So he must be feeling particularly nervous at the moment because he's trying to take credit for a mathematical inevitability that's turned out not to be the case. But I do still think, because of the way inflation is calculated and the forces at hand, it's not going to take much for that annualised rate to drop to below 5%. We may get there by the end of the year. We may not. Again, it's a timing thing. But I currently think it will get there or thereabouts.
So we know what's happened, and that it is useful to look back and take stock of what's happened and where we're at right now. But everyone, including ourselves, wants to talk about what's going to happen. Because we can't change the past, we are here in the present. So what are we going to see in the future? And Rob, if we were forced to make predictions again today, and luckily I'm not going to force you, you're welcome to volunteer it. What would you say right now? What do you think the second half of the year holds for the wider economy and property investors specifically?
It's a really good question because 6 months isn't that long. You'd have thought you'd be able to look ahead that far. But as we've discovered, things can feel so different just 6 months apart. So trying to imagine how we're going to be feeling like in December with our scarves on, talking about how the year's gone is really difficult. If I had to pick, I do think we're going to be thinking a lot less about inflation by the end of the year. It's been very much the theme of the first 6 months. I think that's going to be less of a preoccupation by the end of the year. I think the economy will continue to be fine. I don't think there's going to be any kind of gigantic collapse, but I also don't think that productivity is going to magically pick up and everyone's going to be feeling great about things. And in terms of property prices, if I had to choose, I think they're probably going to continue to grind a little bit lower, but very, very slowly. And I do think it will end up closer to our predictions rather than some of the racier drops that we've seen. In fact, the latest forecast that I've seen from Pantheon Economics has got a peak to trough drop of 8%. We're currently at nearly 5%. So they've only got another 3% to go, and they haven't said when that trough will be. So that may go beyond the end of the year anyway. So I think I'm probably pretty aligned with that, with the big caveats that firstly, of course, I have no idea. Any kind of a major event could happen and knock all this miles off. So nobody really has a clue. And secondly, it doesn't really matter that much because we're not investing for the next 6 months. We're not even investing for the next 6 years. We're investing for the coming decades. So I think it's really interesting. I'm interested in your opinion as well. But I think we should treat this kind of speculation as interesting rather than based on this feeling, I'm going to completely change my investment strategy one way or another.
Yeah, I agree, Rob, with everything you've just said, so I'm not going to repeat it. I think property prices, I would be surprised if they were much different from where they are right now by the end of the year. So slight tweak on what you've said, but not much of a tweak. But everything else around inflation, the economy, I agree. I really hope I'm not cursing us all, everyone. I do feel the second half of this year will be a bit duller than the first half. And let's face it, that's not hard, right? That's not much of a prediction. It's been a bit of a crazy first half to the year. But I do feel the second half, not as much will happen. Things will ease off a bit, but it's not suddenly going to dramatically go in a positive direction. I just think inflation will fall a bit. Interest rates would have peaked and possibly would have started to come back down again by the end of the year. And I think the property market may drop a little, but then recover a bit, so end up pretty much where we are before the end of the year. So what does that mean? Well, it means it doesn't matter. If not much is going to happen over the next 6 months, you shouldn't care. And actually, you shouldn't care anyway, because unless you're into property flips, if you're buying for the long term, the next 6 months doesn't matter. What's more important is what's going to happen over the next 10, 20 years, because they should be the time horizons you're looking at and beyond. And will property prices be higher in 10 and 20 years? Well, I bet a lot on that. I'll put it this way. I invest a lot on that. But I believe, like I'm sure 99.9% of people who listen to this podcast, that property prices will be higher in 10 years and will be higher in 20 years. And therefore, as a long-term investment, I'm doing the right thing. So the next 6 months, whether it's dull or exciting, actually doesn't matter. And I think that is the biggest takeaway from all of this. While it's interesting to get stuck into the detail of what is happening, this year will come and go. And it'll be a blip in a memory, and people will forget actually what happened to property prices during this year. But what they will know is that over the long term, they were rewarded. And that is what we have to focus on.
Okay, just time before the end of the show for Hub Extra, that part of the show where we bring you a little bit more in the form of a resource, a quote, a hack, something to make your life a little bit better. And Rob, this week you've told me that you've brought something along, but you haven't told me what it is. So let us in on the secret.
I will. First, I want to say, though, full confession, I've not actually used this app. I've downloaded it, but I downloaded it for a reason. So a couple of times this year, I've had to hire a car overseas, which is fine, not a big deal, right? Well, the big deal is just how crazy prices seem to have gone now to hire a car. And because of that, I thought there must be a better way. And then I stumbled across this app called Turo, Turo, and it bills itself as the Airbnb for cars. And it has coverage across a lot of major cities. Unfortunately, not the places I wanted to get a car, so I've not been able to use it yet. But London, many cities across America, some of the big cities in Europe, they have coverage of this app. And it looks like it would be a lot less than hiring a car. The Airbnb of cars seems to me like a great idea. So I can't endorse this app, but I do endorse the idea. And go and check it out. You may find a city that suits you. Certainly, if you need to hire a car in London at any point, it's worth checking out. And there's a good coverage of different types of cars you can go for as well. So for me, Rob, this is a one to download, one to watch. We'll see if it takes off. I have no idea if the service levels are there of Airbnb, but as a concept, I love it, and I can't believe it's not been done already.
I've just been having a quick browse while you were talking. I'm disappointed to see that there are no Lambos on there for London at the moment, but I could get a Maserati for $135 a day, which is a small price to pay to be able to show off on social media. So I might be doing that, but I'm sure it's got more practical applications as well. And anything that takes the pain out of car hire, it's got to be something worth checking out. So I'll be giving that a look for sure. And we will, of course, be linking to that in the show notes for this episode. So that is us done for this week. Hope you enjoyed our reflections on the first half of the year and it's helped galvanise you to make the most of the months ahead. Do make sure that you join us next week because we've talked about what may happen with house prices in the future. We've got a completely fresh perspective on looking at what house prices have been doing in the past that I think could actually get you thinking about everything in a completely different way because it has done for me since I discovered this concept. So do make sure you join us on Thursday. Have a great week and we'll see you then. Bye-bye.
Bye-bye.